Okay, call a meeting to order. Roll call.
Okay, Director Lindor,
Here.
Director Paul,
Here.
Chair Riley,
Here.
all members
Any-
present.
Thank you. Additions or corrections to the agenda? None? Okay. No members of the public here. Any members of the public online?
I will check. We do not have any members of the public.
Okay, thank you. We'll just proceed. Maybe this will be a fast meeting. Action items, adoption of the minutes.
Public comment?
Oh, where's public comment? Oh, no, I was just asking for public comment.
Oh, okay.
There's nobody here. There's
All right.
nobody online.
There's nobody here. Okay. Sorry.
Okay,
Sorry.
action items. Okay.
Let's go pretty fast.
Minutes, any comments, corrections at all about the minutes last time?
None from me. None from me.
Not for me either. Okay,
I move adoption.
second, all in favor, say aye.
Aye.
Aye. Motion carries. Number two, I had a question, but I'm trying to figure out where my question is compared to what item we're on. Okay, item number two, adoption of the treasury report for December. Any questions or comments about that? Before we proceed, though, I do have a question.
Yes.
In this report, there's a lot of segregated or separately consolidated collections of transactions or expenditures or whatever. And I'm having a hard time convincing myself that I understand this. It's not really understanding it, it's how it's structured. For instance, where are the rebates? I thought they're usually titled rebates. I only see one reference to a rebate. And it's on page 16. I said, wait a minute, maybe
I
that.
think
Maybe
it
that's
starts
wrong.
on page 14.
Maybe.
Do you have the one with the numbering? All right. First of all, Director Chair Riley, Director Paul, and Director Langer, I wanted to start out with a little bit of appreciation. Great to have you on the committee. I worked with you in the past. I really value the synergy you bring, and I look forward to working with you this year as part of this committee. And I can provide a little bit of an overview about the treasurer's report, or do you want me to just directly dive into the question at hand about how the report is organized?
Oh, okay. Well, let's go to your report, your summary, and we'll go
Yeah.
from there. Okay.
Okay. So let's see. I'm going to provide this, and you've seen this format of the report before. I hope that's not. Is it me?
Also.
I am so stressed. Stop. Just realized. I'm going to put this in airplane mode. This shouldn't be here. All right. So this version of the treasurer's report, it shows we have 2 bank accounts and 3 investment accounts, and we usually provide a high-level overview of where we stand in terms of our total cash and investments. This report is for the month of December, and so let's see if this thing works. Okay, it is working. So we started the month of December. If you look at the screen, I try to put this as a highlight. So we started the month with about 31.9 million in cash and investments, so almost 32 million. And then we ended the month with about 36 million, or 36.8, which is almost 37 million in cash and investments. We received fee and deposits of about 8.4 million and made disbursements of about 1 million. A detailed listing of those disbursements is shown in Exhibit B. The deposits that we received in December is higher than usual, and that's because of three reasons. Because we don't receive 8 million in deposits in a given month. But this time around, we had three large payments come in. One was a payment from the Department of Water Resources for 3.7 million. It was for the expansion project,
A grant.
a grant payment. Second, we received a payment for sale of water in November. That was 2.2 million, and that was for purchasing about 400 acre feet of water for the month of November. And then third, we also received the first installment of our property tax payment for 1.6 million. So out of this 8 million, about 6 million is passed through payment for the grant and the purchase of water, or the sale and purchase of water. So that's why our ending cash balance, cash and investment balance is higher than usual. So we're at 36 million as opposed to 32 million, which is generally where we stand.
And also these revenue sources, at least the tax
Property tax.
covers the next few months, like half a year.
That's right.
Yeah, so.
Yeah. Yeah, we receive tax payments 3 times a year, starting with December, April, and June. So this is the first installment is usually like half, a little over half sometimes of the total property tax payment that we would be receiving. So, so to come back to your question, so that's the high-level summary for the Treasurer's report. And to your question, Director Raleigh, Exhibit 2B, this is a report that comes from our financial system, and we have the ability to break this out into different categories. The way this report's broken out right now, it's divided. So there are 3 different categories of payments that's shown here. On the first page of Exhibit 2, these are handwritten checks that have gone out. Then the next page is, these are called virtual payments. So these are electronic checks that go out to our vendors. So we have a third-party solution provider. This all feeds electronically into our financial system, and then electronically it goes to a third-party vendor that cuts the check. So those are virtual payments. Then the page after that, which is page 4 of 9, Exhibit 2B. So those are all benefit expenses. These are called bank drafts. So we sometimes, so for IRS payments, we log into the IRS website and submit a payment. So if we have to log into their system and submit payments, that's called a bank draft. And then the pages after that, those are all rebate payments. So we had about 33 million in rebate payments. And for some reason, it's not called out as rebates, but we can look into it. I think this must just be the way the report was run.
Just backing up, I do see where on page 13 it said rebates, but I took it as just a single rebate. And then the next page did not have that title. That's why I was asking.
Got it. We can manually add that, because this is a pre-formatted report that we just extract from the system. So, yeah, so we have about 33,000 in rebate payments. Pages 5 through 8 of Exhibit 2B.
So let me just go to page 17 for a moment. These are the all bank code check summary. This is not the summary of everything that you're reporting on. It's a summary of a certain category. Or is this the summary of all the things that all the pages ahead of it?
The 817,000?
Yes.
That is.
I was looking for the totals and I just couldn't get my brain around
It ties into, so 556 or 590, that kind of ties into the AP automation payments, the payroll tax and benefit that ties in to page 4. We can do, we can there's incremental changes in how we present information, and this all ties in, but to visually show it, we can do that. So, we can show you that this is all coming from the same payments. Salaries and benefits aren't shown here. There used to be a report where it showed how much was paid to each employee and that report isn't here. But that report is captured in the total in the treasurer's report. So we took that report out, but the rest should tie up. So total payroll payments, payroll tax and benefit payments are 186,000. So that report isn't there, but the rest of the payments should tie up.
But that payment, the one you're just talking about through the benefits. I was going to 17 on the total. It's not in that total either. Is it? Okay.
I'm pretty sure this all ties up. I think for the board meeting, I'll provide a breakdown that links the two reports together.
Well, what I would really like to just be able to see and find is that each category has a total.
Mm-hmm.
And each category is also represented in the summary of those totals.
Mm-hmm.
And what I had a hard time following through, my main dilemma was starting on page 17, it says rebates. It's only one item there. And then there's just page after page that's following that. And I just took that as a separate report. That's why I couldn't track it.
Got it. So page 8, the total rebates is 33,515. That's shown in the treasurer's report on the first page, 33515. Then
Mike? Did you say page 8? Mine is blank.
I'm looking at the, wait, can you give me that report? Sorry. Thank you. I wish I had that printer.
Page 8 is my copy.
Okay, so. Where is
Page
that?
8's blank in mine.
Page 16 on the top right. I was looking at the bottom page number.
Okay.
Page 16.
Yes,
So 33,515.
yes.
That ties into the treasurer's report here, 33515. Right here on the screen, which is page 7. Yeah.
I have a question. I'm sorry, back on the rebate page. Are these rebates tied into an address or a name?
So people submit what's called a W-9, which has their tax information and everything. And we, I think for regular vendor payments, we get a W-9. For rebates, we get a list of rebates from order demand, and then we process it. It goes to the recipient's address as listed on the rebate application that they submitted to us.
Got it. Because I'm seeing at least one duplicate name.
Sometimes
I work in the town. I see names I know.
Sometimes someone could apply for a rebate for a dishwasher and
Got it.
something else.
Yes. Okay, that makes more sense.
Sure.
Not that I looked at every single name.
Yeah, toilet. Yep.
Well, here's when you say a particular category of expense is reflected on page 7.
Mhm.
That's not where I would go to see a summary of what's on page 9 through 14. Because what's 9 through 14 ought to be summarized, 14, I'm sorry, 16, whatever.
17.
9 through 16 should be summarized on page 17, it seems to me. And that's where the totals are I can't track them.
Mhm.
And they're not listed separately, and all I'm asking is that you can read the report, not that it's good, it's interesting reading.
Yeah,
It ought to just summarize the individual subtotals
Yeah.
as well as the main total.
yeah.
Yeah. This-
In the future, sometime.
Yeah, no, this is great suggestion. We will make it tie together. Then it's easier to read and in fact, we might be able to do it in the next week's board meeting. So we can make a brave attempt to present it that way.
Okay, okay. Are there more things you want to report on before we kind of got on the,
Not on this item.
well, and then 2C, is there any comment you want to make on that attachment?
And that's a statement of revenues and expenditures, and we will get into that in the financial activity report, which is the next item.
I have a question through the chair.
Sure.
Yeah, when I review these, I sort of pause over the largest, some of the larger amounts. What is the large one for Sand City Lodging? What is that? That's 38, over $38,000. I'm looking at page 10. Towards the bottom. What is that?
Yes, we,
And if,
okay.
I'm sure Dave Stoll would know, but maybe somebody.
Sand City Lodging.
Page
Okay,
12.
let's see if I can try to pull this up on
Should
the
I have on the
fly.
bottom?
Yeah,
I just like to be sure that I know, or especially, basically especially the big costs.
let's see if I can pull this up in real time.
Yeah, good question.
Okay, so
The close on the same page, Close and Associates is another.
that's one of the major utility engineer, their engineering firm for, and I have this pulled up. Alrighty, so this is a refund of capacity fees. Water permit number something 48000. So they gave us permit, and then for some reason we had to refund that fees. Like it's related to some big project. And because this approval happened through water demand, please send a refund of 38,431 capacity fees to Sand City Lodging. And this was approved by the water demand manager.
And that's the big construction that's taking place, I think. Is that the
The
hotel?
new hotel,
Hotel there?
probably.
Why,
Yes.
something we haven't seen.
Well, I've never seen that phrase before, Sand City Lodging.
Yeah,
That's,
yeah. Okay, thank you.
Sure.
well, let's see. I have one other question. Oh, the refunds for the 152 committee and all that legislation we kind of eliminated or, abandoned, whatever it is, it's behind us. But where does that show up? Where's the accounting system for that? So we see how much went out and whatever.
Yeah. So this all was captured in last year's audit. We booked an expense for 3.5 million and a settlement liability for 3.5 million. According to the rules of accounting, the checks will go out in March, which is the effective date that the court has given us. So we will start cutting individual checks out. They will all total to 3.5 million, and they will hit our liability. So our liability goes down, and then these checks, our balance, cash balance goes down. So you will see it after the month of March when everything's done, all the checks are cut out. it is a balance sheet item, so we won't record it as an expense. Our liability is going to go down because we already recorded an expense when we knew that this thing was coming. And this is all, we consulted with the auditor on what's the appropriate procedure to record this, and so that's what we did. The checks, when they are cut, we can provide if you want to see 30,000 checks in a report, it might be logistically a little hard, but those checks could be in some report format. And so that will happen once those checks are cut in the month of March.
I just think the board ought to be informed a little bit on how that's progressing and what the scale of it is and the timing it is and so on. And just as a reminder, the March,
Effective
the
date.
intention to cut checks in March.
Uh,
Is that the complete list of people who have responded and have earned the right to get this refund because they followed the process? Are there more coming after March?
Now we have gone through multiple steps and we have come to a final list of people who are eligible to be paid. And then once this is done, then we will wait for the checks to be cashed out. If for some reason certain checks are not cashed out, we will wait for 1 year. Then we will take that money back and we will give it to United Way. So there shouldn't be any more checks to be cut after this exercise is done.
So you can just have an individual report to the board on just the status of that after you cut the checks and just give us a report on it.
Maybe a reconciliation report, like this is how much is reconciled, this is how much has actually been cashed, and this is
Yeah.
what we're waiting on to be cashed.
Right.
And
And
just an update. It was a big deal and
Mhm.
update on kind of wrapping up things.
definitely, yes. Yeah, we have been having these conversations with our attorney on the totals and how much needs to be paid to their attorney versus all the prorated costs that go to the ratepayers. So it's all happening, but yes, we can bring it to the board and provide a summary once this exercise is
It
done.
kicks off, yeah.
So if I was eligible for a refund, but I didn't apply for it,
You'll still get it.
I'll still get a check?
You don't have to apply for it.
Yes, yeah, no one has to apply for it. You can opt out. If someone opted out, they won't get it. But if,
That's what I should have done. It's just paperwork. I didn't care. Don't cash it.
it's gonna be an
Oh,
option.
I see. Okay, I'm going, Mike, I mean, this is a good point to make. Don't cash it, then it'll go to the United Way cycle.
Yeah.
We'll have more accounting to do at the back end, but that's okay.
Well, maybe I'll cash it and just donate it to
In-
United Way.
I think it would be nice to see like a monthly, once it gets rolling, a monthly
Yeah.
report, like this is how many have been cashed. This is what we're still waiting on. This is what was
It's a
distributed.
numbers game.
It's just a numbers game. It'd be at least interesting to know that people are getting them, they're cashing them. It's working and,
Yes.
you know.
Yeah, just figure out some way to keep us a little bit.
Yeah, a one line item.
Yeah,
And we brought that point up a couple months ago where,
Yeah.
we still have checks that haven't been cashed and they've been carrying for a
Mhm.
longer time.
Mhm.
And, we just clean that part up and obviously with this program, the leftover money will go to the United Way.
Yeah,
Which will hopefully help people with utilities and things like that.
those CalM rate hikes.
PG&E or whoever that are utilizing them for rate assistance.
Yeah.
yeah, the low income ratepayers would benefit.
Well, there's some probably large corporations here that are getting the refunds, right? I mean, there's some big water users in this.
The multifamily, yeah, ratepayers and commercial ratepayers, so they would be getting a refund if it was on their property tax bill. Yeah.
Okay, well, good. Good. Good.
Need a motion.
Need a motion to approve? Okay, well, I'd move approval, just.
You recommend that the board accept the report?
The board adopt the treasurer's report for.
Adopt it.
Second. Can you figure out who did the first?
Yeah. The verbs here.
Was that Director Paul with the motion and Director Lindor second?
Yes.
Sure.
Okay, moved and seconded. All in favor, say aye.
Aye.
Aye. Motion carries. All right, item number 3. The second quarter financial review.
Yes, so I'll be going over this item. This is the financial activity report from October 1 of 2025 through December 31st of 2025, which is the quarter 2 of the current fiscal year. And here, looking at Exhibit 3A, which is what's shown on the screen, we are comparing the year-to-date revenues and the year-to-date expenditures with the year-to-date budget, which means the budget is prorated. So if our original budget was 45.6 million and we are 46.5 million. And so we basically are comparing what we have received and what we've paid with half the budget. And so if you look at the very top table, we have received about 17.8 million in revenues. That's about 77% of our year-to-date budgeted revenues or estimated revenues. And we have expensed about 16 million, which is about 71.4%, 71% of our budgeted expenditures. That's the high-level summary. And I can quickly go through the various revenue streams. This is Exhibit 3B. And this chart is comparing the actuals in gray with the prorated budget in black, and starting from left to right. So property taxes, the year-to-date budget is 1.5 million. We received 1.6 million, so 7% of our budget there. User fees, we received about 83% of our year-to-date budget. And that's because this includes 5 months of fee payments. We receive user fees one month late. If we were to include the December user fees, then we are almost at budget. Then that would have been 97%. Pure water sales, so the actuals are 76% of the year-to-date budget. Now, this year we had the expansion project kicking in. So the budget that's shown here is higher than expected because we assumed that we will have regular water sales for the first 5 months and then additional water sales due to the expansion starting November. And so that the second piece isn't captured in the actuals, but it's in the budget. So our actuals are lower than the prorated budget for the water sales.
Because you expected a larger amount in the second half.
Yes. Yeah, all the additional payments will come in the second half. So the first half's kind of lower.
Yeah, that was kind of my question, is what happened here. But it's a scheduling thing about how you're budgeting a mid-year addition, a mid-year, new.
Yeah, yes. It's the prorated budget. If we hadn't cut the budget in half, then we should just show how much we budgeted every month. But here we are just basically taking the entire budget for pure water sales and just cutting it into half, because that's what we did for every other revenue stream. Anyway, so we will catch up on this in the second half.
Yeah.
Capacity fees is twice than what was budgeted, and that's because of the large projects that we had at the Montreal Airport. And I think there's a commercial building, and then there was a conversion of an office building to an apartment complex building. So capacity fees are higher. Permit revenues are also higher by about 39%. And usually The permit fees are kind of tied to capacity fees a little bit. There's some correlation there. So more projects, more permit fees. Interest revenue is about 20% higher, and that's because we thought that the interest rates would go down, but they have remained elevated throughout the year, so we're benefiting from more interest income. Grant revenues, this includes just the grant revenues for quarter one. Quarter two grant revenues are still being processed, so our grant revenues are lower. Plus, you'll see in the mid-year that we're actually recalibrating our budget for grants. So that will bring it more at par with each other. And then others and reserves, those are very small categories, and we book reserves at the end of the year. So that's the revenue side.
We'll just slow down a minute. Your earlier report talked about increased grant money coming in, but it's not. Is it reflected here?
So the 3.7 million payment that came in December, that actually is a big chunk of the 3.8 million that you see here.
Okay.
And then we have a state water resources control board grant for one of the injection wells, and then we received about 130,000 for that grant payment. So together, that's bringing it to around 3.8 million here.
Okay, I just thought the revenue side, the dotted column, would be higher because of that, but it's you're.
They haven't closed up all the grants yet. But we're close, so that remaining 1.5 or whatever, they're gonna finish those out, so that'll get us up to that point. I think that's what he's talking about, a mid-year budget adjustment, and trying to reconcile that moving forward.
Okay.
The 3.7 million that we received in December was for the months of July through September. So there was just one quarter payment that we received in December. The work that's performed in the second quarter will be received in the third quarter.
Okay. I know it's all a timing issue here. And
Yeah.
you got to cut off at some point.
Yeah.
Okay.
And then moving on to Exhibit 3B. This looks at actual expenditures versus budgeted expenditures. And here you can see personnel expenditures are about 3% higher than budget. So that's almost conforming to budget. Services and supplies is 95% of budget, so almost there. Fixed assets, not much happening, and I'll cover this in the mid-year report. We originally thought we were going to get 2 RAV4s this year, but that's going to happen next year in August or September. So we're going to move the budget for purchasing the vehicles to next year when we have to make a payment for it. So that's fixed assets. And then project expenditures. This includes 2 big categories: the purchase of water and all the grant expenditures. Now, since, as we looked in the revenue slide, our purchase of water is lower than expected because the expansion didn't kick in. Plus, our grant expenditures only includes quarter one, not quarter two. So that's accounting for all the difference here. And then the other categories are much smaller expenses: election, contingencies, and reserves that we book at the end of the year. So that's the summary for this item.
It's always been a little frustrating to me that the grant cycles are just all over the line. There's no cycle to it. Yet you include it in kind of the regular reports. And because they gyrate so much, it doesn't give you good predictable patterns to work from. Or even just trying to stay on track with it, or stay aware of it. And it's just frustrating that it's hard to get a pattern of anything if the grant money's included. That's all I'm really.
That is correct because grant payments are like capital projects, and these large payments basically skew our regular operating expenses because they're so large. They're very chunky. They happen, in certain intervals, and so that if this is any solace, this is going to end this fiscal year, or that's the hope. We will be done with the water expansion project, and then we'll come to a little bit more predictable world, hopefully, so it's the last year of these grant expenditures as we see it.
Well, in some of our grant programs, the grant revenue we get is for some other project. I mean, we're supporting a Sand City project, or we're supporting a Monterey City project or something.
That's right. Those are the IRWM grants where for stormwater capture, where we act as a pass-through, we get the funds and then we distribute it to other public jurisdictions, including the county and the city of Monterey, city of Sand City. And those aren't as big as the expansion, but yeah, they have the same capital project feel to it. And so those are also kind of bigger payments. That activity has been very slow this year because these different entities aren't spending money at the same rate, but we have time. Those grants don't, I think those grants will stay open for the next 2 to 3 years. So we will keep prodding them to make more progress and expand those funds. But yes, those IRWM 1 and IRWM 2 grants are also part of the project expenditures.
Well, the expenditures are really not within the district's
Control.
It's it's within another jurisdiction.
Yeah.
Well, if you ever have a brainstorm, some middle of the night, you'll have an idea about how to report that. So just so we can kind of stay in tune that, well, part of these reports, some parts of these reports are could stand a little more explanation. That's all. And then maybe just a little supplemental thing, just a summary of what the grant activity was during this period of time. And it just helps us, it reminds us that we're in the business of, helping other people with grants, but we're the manager of the money, and
Yes.
it's very little to do with what we're doing, except
Right.
just being a middleman.
Yes.
It's a relatively small number of grants, and so I guess it would be good to know if there's a delay, the reason, if there's a significant delay, is there a reason, and is it gonna get on track in time for the grant to be awarded?
Spent, yeah.
Spent.
In fact, page 58 of our report, which is the contracts report, we do break out the funding that goes to the various grantees or the sub-grantees. So Monterey One Water, City of Sand City, County of Monterey, City of Monterey, that provides some information about grants because grants are also contracts. So this is part of the contract report that that we provide. And we can certainly see what more we can provide. So these are the open grants at the moment. Page 58, you can see the first one is the 11.9 million grant for Pure Water Monterey expansion through the urban community drought. And then the second one is the 4.8 million for injection well number 6, or yeah.
Mm-hmm.
I have a question through the chair. Grants, have we ever had to return grant money because it wasn't used?
No, we haven't been in that situation as far as at least since I've been here.
Yeah.
And I don't think we will be in the situation for at least the big grants that we have currently going on.
Yeah, I used to work in grant acquisitions, and boy, you use it or you lose it next go round. They're like, oh, you didn't need it, so we're not going to give it to you. Yeah, it would be nice to see, like, here's here's who's reaching that deadline. Do we need to kind of poke them a little bit and say, hey, listen, we have this money sitting here?
And we work with the district engineer because she acts as a point of contact with the
Okay.
project sponsors, and she kind of tries to hold their hand and say, hey, sometimes, for instance, Sand City has had a lot of staffing changes, and there's no one person in the finance department. They keep moving, and then someone new comes in and tries to take it. And then, so this doesn't seem to be their highest priority, trying to spend these funds. That's what I've, or at least I've come across it through my discussions. So there could be numerous reasons, with staffing being one of them. But we do remind these
Excellent. Yeah.
entities, and we do work with our district engineers to make sure we stay on top of these funds.
Yeah, I've seen where some public agencies, I've been involved myself, where you get to June and you haven't spent the money. And then the other people that are looking at your budget will say,
Yeah.
well, since you didn't spend the money, then you don't need as much next year. And so,
Yeah.
yeah, and anyway, that's just an internal dynamic, but.
Yeah, no, that's a good point.
Sure.
Well, thanks for pointing out this contract point on page whatever,
Yeah.
58. But I hadn't made that connection either. But I haven't studied these for a while either.
Mhm.
Anyway, it's good to know. Good to know.
No.
So let's see, we're on item 4, no, we're not there yet. We're
3.
still on item 3, okay.
Yeah, it just says the other board will have to receive this second quarter activity report.
Okay, is that a motion?
So we don't need a motion, do we?
Oh, no, just no, okay.
Probably don't need a motion on
Okay.
this item.
All right. Then we'll proceed with item number 4, which is update of investment policy.
Yes, Chair Riley, let me see if I can bring this up. So item 4 is the annual review, update and approval of the district's investment policy. There are no major changes here. There are some minor edits to the exhibit, which I'll go over. But I thought it would be helpful to provide a brief overview about the policy itself. And so starting with the objectives. So the policy lays out 3 objectives for investment of district funds. So the number 1, the first objective is safety or protection of principal. Number 2 is we should be able to meet our cash flow needs. And number 3, once objectives 1 and 2 are satisfied, then we can go for a reasonable rate of return on our investments. And we try to satisfy all 3 objectives, focusing on objectives numbers 1 and 2 as stated in the policy. Besides these objectives, there are certain rules that we need to comply by. The first one is the state statute. This is California Government Code 53600, which deals with investment of district funds. Then we have the County of Monterey investment policy. And then we have the district's enabling legislation, specifically Part 5, which deals with deposit, transfer, and investment of funds. And then besides that, we have what's called the prudent investor rule. And so this rule, there are 2 standards of care here. One's called the prudent person rule, which is a 19th century standard, which says that trustees are required to invest in a cautious and reasonable manner, focusing on safety and income. That was the 19th century rule. What we have is called the prudent investor rule. And this is an evolution of the modern portfolio theory that came in the 1990s. And it says that we are required to look at the portfolio as a whole and focus on diversification and risk management, looking at all securities together. So that's what the policy speaks to, and the treasurer acts as a fiduciary. I just wanted to emphasize that, which means acting with care, skill, prudence, and diligence under the prevailing circumstances, and making sure that the objectives are met and the rules are followed. So that's what our investment policy states.
It's a good summary.
Thank you.
I'd like to see that.
The next slide just provides an overview of all the eligible investments that the district can invest in. So there isn't much of a change except for the two items in red. So these are different investments, the maximum term of that security and the maximum percent of portfolio. This is exhibit to the staff report. And here you can see that most of our investments are well-diversified investment pools, and those don't have a maximum security, but all of the investments have a maximum term of 5 years. So the only change here is the maximum percent of portfolio for commercial paper has been dropped from 40% to 25%. And this is, we just look at the California government code and try to match that, make sure our policy kind of aligns with the California government code. So that's all we're
Where's
doing
it
here.
drop from 40 to 25?
Yeah,
That's what you said?
there was a minor nuance. If the portfolio size is less than 100 million, then we can only invest 25% in commercial paper as opposed to 40%. And I think previous policies carried 40%.
This is for risk management reasons, they reduce the.
Yeah, diversification and risk management. Don't put all your eggs in one basket. I mean, that's the theory.
Who initiated the change? Was it?
It's me reviewing it, and then we run it past the district attorney, and they also review it. So any minor change that is reviewed by staff and the district attorney just for the staff item.
So is it locally initiated?
It's a local initiation.
Okay, that's what I was really concerned about. I'm glad to see that.
Is that best management practice with other public agencies in Michelle? So be at 25 or some of them are at 40?
Yeah, so this is all an outcome of the state statute. If a public agency's portfolio size is above 100 million, they're subject to the 40% limit. If the portfolio size is less than 100 million, as is the case with us, we are subject to the 25% limit.
Does that 25% limit apply to just this particular type of investment?
Yes.
Yeah, okay. And what was the change with the joint power?
Yeah, so we had two different line items for California class and California camp. Now, in the government code, both of them are combined as GPA pools, GPA investment pools. So we've just kind of aligned the way we present this with how the government code presents it. So it's more of a, there's no change. It's just how things are presented. We invest in class, but not in camp, but we have the ability to invest in both. And we call it a joint powers authority pooled investment.
So going back to page 7, which are the pools that are affected by the joint powers classes? I'm pretty sure. Is that
Page 7.
as well? It's across the top, it shows all the investment that we're involved in.
Yeah, so California class it would be considered a JPA pool for our purposes. Because LAIF, a local agency investment fund, is called out separately in the investment policy.
Okay, so we do have one category of investment that is
Yeah.
within the rule. Okay.
I'm looking at page 41. It shows it there. Looks like it's under 3% of our portfolio currently.
Yes, so the other piece that we look at, and I'll go over this in the investment
Okay.
in the next staff report, we comply, I mean, we're supposed to comply with the investment policy, which means the maximum term, the type of investment, the maximum term, and the maximum percent of portfolio. So we try to comply with all three criterias.
Mhm.
And that's this item. The next item actually feeds into this one, but I think this one needs to be adopted.
Do one at a time. Okay, I'll recommend adoption. We recommend adoption to the board for this update in investment policy.
Second,
All in favor, say aye.
aye.
Motion carries.
Budgeted.
All right, so then item number 5 is continuation of the discussion.
Yes, this item is the approval of the second, or consider approval of the second quarter investment report for the current fiscal year. And I think you might have a page here on your desk. And I thought it would be nice to have a visual this time around. So the first pie chart is showing the breakdown of our investments across 5 categories: the 3 investment accounts and 2 checking savings account. So and the first pie chart, you can see that 45% of our investments are in LAIF, about 29% is in multi-bank securities, which is a combination of bank CDs and government bonds. And then the rest, 3% is in class, and the rest is in bank accounts. Just a small piece here. You must have noticed the word money market accounts in the treasurer's report. We are changing that to a public funds account because we weren't earning anything in the money market account. We were earning 0%. So I called our contact at the Bank of America and said, you know, we have money set aside here every month, and is there a way that we could earn some return? And so they said, yes, you need to change the account. The account number and everything stays the same, but it's called the public funds account, and it earns a 0.25% return. So last month we earned like $900 on that account. Previously we were earning 0. It's still something. So we're trying to make small changes to the benefit of the district. So that's why you'll see public funds here instead of the money market account on the first pie chart. And then the second chart is comparing the last 4 investment reports. And the latest investment report is seen on the far right. And if you look at the very first bar and the very last bar, the blue section is how much we had in LAIF. So we went up 2 million from 14.4 million to 16.4 million in LAIF in 1 year. And if you look at multi-bank securities, we were at 9.3 million in Q3 of last fiscal year, and now we're at 10.8. So that went up by 1.5 million. So our portfolio size has increased. And then obviously, just for this month, we have more in the checking and savings account too, just because we have 6 million in pass-through payments that came through in December. That's kind of skewing it. So I thought this would be a good graphic to see how we have been doing in the last few quarters. And you can see we have stayed around 32 million, but there's generally a dip in Q1, and then there's a bump up in Q2. But so right now we stand at 36 million across all our investment accounts and bank accounts.
Questions?
Yeah, through the chair, I see that according to this graph, the amount we're keeping in checking account has shrunk. It earns very little or nothing.
Yeah, that is trying to optimize our cash flow. We try to keep as little in the checking account, but at the same time, make sure all the payments, like the payrolls going through and all the other expenses are going through. So we move money, try to keep enough money in the public funds account for day-to-day needs, and everything else we move to the investment account.
And the money in the public funds account can be moved quickly if necessary to the checking account.
Yes.
It's liquid.
It's liquid, right?
Okay.
And what you just said about earning on $900, that's the public funds account, right?
Mm-hmm.
And you're putting more money in there, therefore we should get a return. I mean, and that's the difference between those two, the checking and the.
Yeah, we cannot.
And this is going to be a pattern.
Well, it's hard for us to predict when the money is going to come in. So for instance, we didn't know when the Department of Drinking Water is going to give us 3.7 million, or we will get money from CalAm. But just in case, whenever they do, for every night we hold the funds, we're at least earning something.
Mhm.
And if we know that we won't be spending it right away, then we would move it to the investment account. But if it's going to go away, if it's going to go to the Montreal One Water, then there's no point in moving it anywhere else. Then we just transfer it to checking account and write a check to them and say, here's your money, take it. So that's the interplay between the two accounts. Money comes into the public funds account, money leaves through the checking account. That's our cash flow.
That's good.
Yep.
It's good to hear that even though something is traditional is just maintaining all the accounts and maintaining the totals and understanding projections and then guesstimating and all that kind of stuff. It's still good to hear that there are ways that you can still do something within that system.
Right.
And I'm glad you're on it. I'm glad you pursued that.
I guess Bank of America doesn't offer checking accounts that earn something on the balance.
We've asked that question, and checking account is like the day-to-day stuff. There's and that's typical with every checking account that you'll see. Any business checking account, whether Chase, Bank of America, any other bank, they don't offer anything.
Mm.
I think I have an account with Chase and it's 0.03%, but that's also like nothing. So
I do like seeing the 5A exhibit every time it's here. I spend a little time with it. Anyway, so if there are no other questions, there could be a motion for.
there's one slide related to this, and I'm sorry I was caught up, and this is not in your thing, but here we are trying to provide a visual on our interest income across the various years. So this is 2016 interest income, and then we are at 2025. And as you can see, starting 2023, our interest income has shot up because we have been in a high interest rate environment. And I'm not going to take any credit for what happened since 2023 because we just adhere to the philosophy, if it isn't broken, don't fix it. And so we have tried to ride the high interest rate environment. So LAIF, Glass, multi-bank securities, they all have given us substantial returns compared to prior years. And I just want to show that in the coming years, obviously this income is going to drop as the interest rates drop. And at that point we can see what to do. But right now we have earned this income without taking additional risk, and that has benefited the district.
And when did you start?
2023.
Yeah, okay. Good, noted.
Duly noted, yes, duly noted.
Duly noted.
Thank you.
But
Well,
I think like any public agency,
Yeah.
should have something that looks like that.
Right. It's like all public agencies, who they didn't do anything crazy, then you were going to ride the wave. It's just, you saw the wave coming, you're going to ride it. Don't do anything crazy. Just stick to the basics and you should be fine.
Will these exhibits be part of the board package?
We can. This was put together last minute right before the meeting, but yes, we can provide it as part of the
Well, I think it's the one I was, the
Right, this one.
increase since 2023. I think it's worth explaining a little bit of that, just so the board gets a sense. I have a concern that's been several years in the making for me, that I think our board needs to be a lot more comfortable with some financial management, I don't know, issues.
Mhm.
And I think the more we keep them informed and up to speed on some things, I think that helps. And this is an example.
Yes, we can include it in the packet.
It's one of my strategic planning agenda items as well.
Keep educating the board
Yeah.
on these issues. Good idea. And
So that-
fortunately, we have a
that's-
CFO that is very good at that.
Right. And it's a teamwork too, so.
Well, I appreciate
Thank
you kind of moving the information systems, the information to us forward. I appreciate that. So another motion maybe to approve this,
I-
recommend the board approval?
I recommend that I move that we recommend to the board approval of this investment report.
Second.
All in favor, say aye.
I,
Aye. Motion carries. Thank you.
Thank you.
Item 6.
Yes, item 6 is recommend,
This is
so it's considering adoption of the mid-year budget adjustments for the current fiscal year. And this slide provides a summary of what's changing. We adopted a budget of 46.6 million. And we are proposing that the budget be reduced by 9% to 42.2 million approximately. And the big changes are kind of summarized in the first table. And this is an item that will go to the full board, so there will be a presentation to the board on this item. This is a smaller preview to that. So there is a reduction of 4.3 million, and the major changes are happening. So the personnel budget is going up by 3%, and that's mostly vacation buyouts, which is part of the new MOUs that we have. So we've tried to look at all the buyouts. We inquire with staff and say, hey, how much vacation are you going to cash out this fiscal year? So that has been included and factored in. Services and supplies, not much of a change. There's some minor change for professional services. We got a new budget book system for 23,000, and then there are some reductions in the other categories, but overall, not much of a change. There's only a $14,000 change. So that's the second item on the first table. And then the big change is in project expenditures, a negative 4.5 million. And that's a combination of two things. If you look at the second chart here, our purchases of Clearwater Monterey, so our water purchases are going up, and our grant expenditures are going down. And I'll walk you through that in this slide. So here, this is Exhibit 6C. This is Exhibit 6C, and this is where the big movement of all the dollars is happening. And what's happening here is when we put the original budget together, we anticipated purchases of about 5,062 acre feet of water, which was distributed between our reserves and how much water we would purchase from Monterey One to sell to Calab. Now we have gotten updated estimates from Monterey One, and they think that they can sell 5,200 acre feet to us. Now, I think we cannot, we won't be able to deliver, or Calam cannot take all the water that we are producing. So, and this is something that we have, internally thought through with Dave and Mike. The district is proposing to, by the way, this is the breakdown of water in the original budget. We set aside a budget of to purchase 250 acre feet of operating reserve and 4,800 acre feet of water to purchase. What we are proposing is we will buy about 773 acre feet of water that's going to be distributed across our operating reserve and our drought reserve. So we will have about 500 and I think 23 acre feet of operating reserve, and that would satisfy all the water that we need to purchase for our operating reserve. Plus, we will have 250 acre feet for drought reserve, and the rest is what we will give to Calam. So this is like the first year of this project is an opportunity for the district to kind of bank its reserves, and that's the thinking behind the numbers that's proposed here. So our water purchases go up, and then if you look at the other item, pure water expansion, that goes down by 3.4 million, and then IRWM1 and IRWM2 grants, that's going down by 1.5 million. Now, when we put together the grant budget, at that time, we didn't know how much money was going to be spent last year versus this year, because we proposed the budget in May. And so now we know how much is spent last year, and then the remaining amount is going to be spent this year. So the funds are going down. And plus there's an accounting change that also happened. And I can go into that if you want, but the crux of the change is if work is performed in a certain year, then the revenue associated with that work should also stay in that year. And so last year we spent more, and then this year we're spending less because previously all the work that was performed at the last quarter was included in the following year because the monies weren't received in time. Now we changed our what's called the revenue recognition requirement from 60 days to 90 days. And so now we can recognize the money in the year the work was done. And so that's what we did. So we're providing a better picture of our accounting. And so because of those two reasons, there's a reduction in the budget for pure water monitor expansion by 3.4 million.
Will this always be a retroactive accounting?
This is the last year of these grants, and especially the expansion grant. So then we are just left with the IRWM 1 and 2 grants, and they follow the same thing, quarterly payment cycle.
It's for the grant accounting system and the whole
Yeah.
district and the relationship to the district. It seems like it's its own world, unrelated to the district. Anyway.
Yeah, we don't get money in regular intervals. It's like every quarter. 60 months at the end of after the end of the quarter, we get funds. But so there are big movements that happen. Like we have to account for what's actually happening that fiscal year. So all in all, our project expenditures budget is going down by 4.49 or 4.5 million. And then this is the last slide. This is the revenue side of the budget. And it's Exhibit 6A, but there are a few revenue streams that are proposed to be higher. So we are proposing that the budgets for permits and capacity fees and interest income be increased. And that's all shown in Exhibit 6A. And then all the reimbursements are getting reduced. And then at the very bottom, you can see the fund balance. So we are proposing to take 2 million from our fund balance to buy the water for the operating and drought reserve.
Through the chair, I have a question.
Yes.
What is the fund balance refer to? That confused me. What's that? What fund does that refer to?
This is combined across all three funds. So we have the mitigation fund, the conservation fund, and the water supply fund. And think of fund balance as like money sitting in the bank account. So we might be getting some money and we might be giving some funds. But whatever's remaining, now this is a accrual-based accounting, so it's not cash-based accounting. So you can't, it's not exactly cash, but fund balance accounts for accruals and deferrals. And so those are funds that belong to us that we would be using to purchase this water for our operating and drought reserves. Is that kind of answer?
Yeah, I think, in reserve, you're not hitting reserves to do that.
We will be hitting reserves. So if you look at the general operating reserve will go down by this amount. And we have different reserves for different needs.
Mhm.
Anything that's not set aside for a need is general reserve. And so this will come out of the general reserve.
Okay, so we're having to dip into our reserves a bit for these adjustments, but is it? I mean, should we be concerned, or is this basically not significant enough to be concerned?
Not at this point, because if you look at page 46 of the staff report, that provides a breakdown of the various reserves.
Yes,
And instead of 21 million, now this is a forecast. The budget is a forecast. So if we don't end up purchasing this water, the money is going to stay in the fund balance. If we end up purchasing, only then there's going to be a reduction. So there's budget and then there's actual accounting. And so when we go through the audit, we close the books. At that time, we'll know exactly how much money was taken out of the fund balance, how much money, like revenues, expenditures, beginning balance. But our current estimate is our general operating reserve is at 21 million. And as if you may recall, we created two new reserves, one for capital project and one for compensated absences. So once money is assigned to those two reserves, and then we are taking 2 million out, we will be left with 17.6 million in the general operating reserve, which still follows our reserves policy. So we have a reserves policy to maintain enough funds so we can go through 6 months of expenditures. And so that's enough funds. So we're still compliant.
And that's a district policy that was set, I don't know, 15 years ago or something.
This was in November. We created a new reserves policy. There are 5 policies that were created. One's the reserves policy, unclaimed cash policy, debt policy, and I think budget policy. So the reserves policy calls out the minimum target levels of reserves. For the general operating reserves, it's 6 months of our expenditures in. So that 17 million is still above that threshold.
mhm.
And I think just, maybe this Dave can help, but I think when Stolt showed up, when he first hired, the general operating reserve was something like 2 million or 5 million or 3 million or something like that. It's substantially more now. So it gives us a lot better protection on how we go forward and how we can manage our business. It's a safety valve. It's kind of like a savings account.
Just to clarify real quick, so, we're at a crossroads here about like, do we go ahead and fill out all the operational reserve now? So we've made a lot of water to date. So, from here to the end of the fiscal year, what do you want to do? You don't want to turn it down that much. And so let's just be made whole on the whole operation reserve. So basically half of the expansion amount is what you got to make. So you have to be set aside. And so that set aside is on the district's books.
Mhm.
In case, something goes wrong, then we can sell it back to Calland if it's needed. The drought reserve is just another piece of insurance that we're betting on, that if something were to happen for say a month or it's like 2 weeks, the plant goes down for an unexpected reason. We have that to dip onto. So we're in a great position. This is a position, we'd rather be front loaded versus back loaded because you have like 2 years to get to maybe 3 years to get to the operational reserve, total. But we're in a position where you do it now and you're set. You don't have to worry about it. I can recall this not too long ago that we were trying to hurry to get to that amount that we needed. And luckily now we're in a position where we'll get there and be safe and waiting if it needs to be used. The unfortunate part is that it's on the district's books.
Yeah, the amended and restated water purchase agreement that the district has with Monterey One Water, we are contractually obligated to maintain an operating reserve of, the exact number is 2,000 something acre feet. And so we can fulfill that contractual obligation this year. And then we are just left with the drought reserve. So thank you for bringing that up.
Well, so it seems like, I mean, it's as you say, a great position to be in. It's really good. We have that extra, reserves in case something goes wrong, in case there's a, unforeseen, all the uncertainty that we hear so much about constantly. Cal-Am is always emphasizing the uncertainties. Well, yeah, there are uncertainties with everything, with every project, right? And this helps with that. So.
And we carry, it's still an asset. We still have this, so.
Yeah, so why is it a problem that we carry it on the district's books? Why is that?
You just saw you're gonna take a $2 million hit to your reserves.
Yeah.
To fund
that.
To buy that.
Yeah, no, but that is a very good use of the money. Very good.
When we sell it, we'll get the funds. It's just getting it, backing it, and then selling it later. Hopefully we don't have to sell it, but still.
Yeah.
So through the chair, I have a question about the litigation insurance reserve on that list on page 46. I thought
You're correct. That needs to be out. Yeah, we need to, I'm going to correct that because we removed the litigation reserve. That 250 would flow into the general operating reserve.
That's what I
Yes,
remember.
thank you for catching.
Okay, so.
Thanks a litigator. To catch a litigator point. Very good.
A lot of things I don't remember, but.
Well, I think just going back to the operating reserve, I mean, the water we're buying for water supply. It's a water supply issue as well. I mean, so it's a comfort zone. And it's not just a budget issue, it's a real water supply issue as well.
The liquid asset of a different sort.
Here.
That's a good one.
Sheila's going to use that whenever he presents it.
5 years ago, the only extra was some ASR.
Yeah.
Now you have ASR plus operational, which is a very different place than we're sitting today. That was a few years ago.
Yeah, a good place, a very good place.
But I think it countermands some of those scare tactics that are being fed to the public as well.
Yes.
If the public knows about it, yeah.
Yeah. Oh, need to talk to you.
Well, we should all have the specifics at our fingertips.
Yeah.
Case.
Yeah.
You know, it can be.
That's something the public outreach committee can talk about too.
To counter the.
Yeah.
Oh, uncertainty.
Yeah.
The number doesn't really roll off your tongue of 2075. That's pretty reserve number is just.
Yeah.
But it's half of
Yeah.
750.
Which is another number that just rolls right off. So do we have a motion on the table?
You want to comment more on any on exhibit D 6D? That's just a summary of the whole budget.
Yeah.
Expenditures.
Yeah, this was the most difficult spreadsheet to put together because here we're distributing all the costs that we are summarizing in the mid-year to the various divisions. But if you look at the very bottom, we came to 42.2 million at the on page 54. So we were successful in distributing it.
Yes. It's always good to see. That's a high, yeah. Okay, so what are we doing with this? Recommending adoption? Recommend the board adopt it? Yes. So I'll move, we recommend the board adopt the mid-year budget adjustment.
I second that.
In favor, say aye.
Aye.
Aye. Motion carries. It's very good. And this will get some discussion at the regular board meeting. So, you might not be sidetracked as often. It's still important. Okay. So we're finished with the action items. We're at the information items. And I didn't know how far we wanted to go.
I know
Do you
that
want to move us through the rest of it or?
Well, I think 7 is just the contracts over $25,000 and
That's just information. Yeah.
easy that people pretty much that's very standard. And status report of expenditure, and that's just all the legal fees we've had to date on the water, the ownership of the water system. As you know, there's a conference coming up on February 24th. Case management conference. That we'll know some more after that as to how things proceed. And I think Michael does a great job every board meeting to explain where we are with the different lawsuits. And so really nothing to discuss other than February 24th. We'll see what happens after the board meeting, obviously. Right?
23.
Yeah.
Yeah.
While we're looking at the next one through the chair, I have a question. Did we vote on item 3? Was that a votable, an action item? Or did I miss it?
Yeah, it's just receiving and filing.
You don't have to vote to receive it because it's in the packet.
Got it.
And once you receive it, you can't not receive it.
Ring a bell, right?
I want to give it back.
Nine is
Where are we on the information? I've kind of lost track.
The meetings.
Number 9, the meeting schedule.
Yeah.
That's just something we need to deal with. And then the future, the agenda item
for the board meeting.
coming up for the board meeting.
Yeah.
I don't see anything there.
Well, there's item 10, you mean you don't see the agenda, the draft?
No, I see it. I just
Yeah.
didn't see, action item so much.
The request from All Saints Day School for a water element.
Item number 10.
Yes.
Are we going to discuss the meeting schedule?
Oh, Sarah's like, I want to know if you guys like this schedule or not.
Yeah.
Well, I noticed that there's a couple tentative meeting schedule tentatively if needed.
Yeah, Michelle can explain those.
Oh. There's not much to explain except, so there are 3, sometimes we have committee meetings that are kind of very like spaced together, especially after the budget is adapted. The budget is adopted in June, and then we don't have very many items right after that for the meeting in July. So there are 3 meetings that are tentative. The March 9th meeting, which is contingent on the adoption of the mid-year budget. The July 13th meeting, because we would just have adopted the budget, then we won't have, enough items for that meeting. And then the January 19th meeting, so if the annual comprehensive financial report is done by December, then that's a break that's also a break to go like take a vacation and, like do something else so that you're ready to come back and, come back in the swing of things. So, those are just built-in days, and all the business of the district will get done. It's just that during those periods, those are lean periods. So this is how we did last year, and we're proposing the same this year,
So these 3 dates are subject to just be canceled, right?
subject to
Or the
cancel.
material postponed until the following month.
Yeah,
Yeah, so it's better to kind of mark them and wait till they're.
Yeah.
Cancel them if they're not needed.
yeah. And if we need to meet, we will meet. It's just the option to not meet if you don't have to.
Mhm.
Yeah. It's good to track that.
Mhm.
And through the chair, Sarah, I have a question. Did Chair Oglesby elect a district or division leader to take Kate's place, or am I doing it?
He did not want to make an official change. So I did review my email from her office, and the date does fall on the FAC meeting dates. So
I'll try to put it in the calendar. I'm going to be here.
yes, and I'll discuss with him further just for agenda noting if we
Yeah.
make any changes.
Okay.
So at the board meeting, I can discuss with him. But so
So
far,
what-
your
okay, what-
schedule is clear, Rebecca, for the
Hmm?
your schedule is clear for attending the
Yeah,
FAC.
yeah. I'm good. I'll make room.
Okay.
What was Kate's reason? I just didn't catch that. She
She
had a
was,
conflict with the county?
yes, she was appointed to the county legislative committee, I believe. And it falls on the same Mondays, and I
Ah.
believe it's like a 1:30 beginning
Okay.
time, so.
Okay, thank you. Thank you. I'm glad you raised that. I didn't
Yeah.
pick up on that. Okay, well, I don't think there's any more action. We were at the next board agenda meeting. We're looking at the water district reserve allocation. Well, what's the policy we have for water? When would we consider an allocation that's unique from an allocation system to all jurisdictions?
So this one is from the district's application. That's why it's coming to the board versus having Monterey County try to allocate it, and it's not that much. So
I'm
it's
sure.
faster for us to provide it,
Uh-huh.
probably waiting for the county. So this is from the district's set aside allocation.
Okay.
Okay, well, we'll get explained to everybody. Okay, and then the mid-year budget adjustment for the coming up is what we just already talked about.
Mhm.
All right, are we finished here today?
Yeah,
I think we
just
are.
one more thing, just for the record, can we have a formal statement that you're adopting the meeting schedule, please?
Oh,
Or recommend for adoption, or is it adoption? Or maybe adopt. Okay.
did I understand, Sarah, did I understand that correctly, that there's a conflict between one of the meetings of this committee and the legislative advocacy committee? Is that what you were saying?
No,
For
Kate
Kate
Daniels, Kate Daniels was appointed to the county legislative committee,
Ah,
which
okay,
conflicts with the FAC meeting schedule.
I see, okay.
Yes.
You want us to move and adopt this?
I move to adopt the schedule.
I second motion.
Thank you.
All in favor, say aye.
Aye.
Motion carries. Yeah, I didn't
Adjourn.
catch that either.
Okay.
And not sure if you saw the page 71 is the draft agenda for the board workshop.
All right. Yeah.
Oh. That's
Oh.
hard.
Thank you.
Well, it's just to remind everybody, where is this place? I was trying to figure out where that is located.
Where is it?
Well, check it
Oh,
out.
yeah.
It
It's
says
a little
it's-
more, but pearl work.
Probably need a map.
I drove past it.
The Pearl Works used to be there on Washington and what is that, Pearl?
28 pearls.
Yeah. Is it still there?
Pearl.
Must be.
Must be.
Yeah, it's.
Is that the one that's
downtown.
next door to the brand new cannabis shop?
No,
Not
I don't
making any
think so.
connection.
Well, what's parking,
It
in that area? It's all-
it says West Garage, Tyler Street.
Yeah.
Oh, that's right. They do mention town. parking.
Right, and then I do have just a few parking passes available, and Mike and I are taking a field trip soon, and we can find out more information about parking.
Yeah, I think that's right across from East Village or something like that.
Right,
Yes.
Yeah. Yeah, I just don't know what building is there. I haven't noticed it.
It's easy to find.
it's I believe the sign is pretty prominent. It's
Yeah.
works, yes.
Yes, and it is across the street from.
Yeah. It's across the street from the news dispensary. You see me park in that lot, don't make any assumptions. No, I actually have parking right down the street from there, so
Oh, okay,
I'll be able to walk with my new knee.
right.
Okay, we're all done here, right? Adjourned.
Thank you.
Thank you.
Right.
So Mike, you're going to the PG city,
Yeah, they're gonna let me zoom it up.
you're gonna,
Let me-
you're gonna zoom in.
Yeah. Except, yeah. Oh, yes.
Oh, that's gonna be nice.
Are you gonna do a little presentation?
My boss will see my car parked in
Just there.
a regular
to-
parking space.
I'll-